With a very light week ahead of us, what are the three things that we need to be looking at that are going to affect interest rates this week? What's going on, y'all? Thank you for tuning in. My name is Kevin Weemark, aka the Mortgage Mouth, bringing it to you the week ahead. Every week, diving in on Monday to just talk about what are going to be the significant market movers for the week. So let's talk about what these three things are going to be. And the first one, and I think the biggest one, is going to be last week. That's right. Typically not something you hear here, but last week there was so much significant data. We also had month end that affected the market. And of course, we had the 4th of July. God bless America. Happy Independence Day to y'all. I hope you had a great weekend. But with that short week, we got a lot of data. Number one, we got non-farm payrolls. It came in much higher than anticipated at 147,000 as opposed to the 111, I think is what it was forecast, indicating to everyone, traders, the Fed, that the labor market is stable. The other thing we got is on Friday, as you could see, a big flyover, fireworks, blah, 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 signatures going on. The big, beautiful bill passed, and it was signed into legislation on Independence Day. And the fear has been there that it's going to have it has a huge $850 billion spending budget, and it's going to add $3 to $6 trillion, it's been estimated, to the federal deficit, meaning that is highly inflationary. And what is the market going to do to digest that? So to me, the biggest thing, everyone, given that short week, right? A lot of traders go on vacation. I think what we're going to see this week, we're going to see rates rise based on that information last week. I think we are going to see markets digest that. And with very little data, as you can see this week, not very much out there. This is a very light week as it pertains to anything that it's of significance this week. Given that, it's going to be last week's going to be the biggest driver. However, the second thing that I see is auctions. We have the 10 and 30 year, as you saw on the chart that I just brought up. And why are auctions so important? Because it's an appetite for federal debt. And once again, what did I just say happened last week? We had the big, beautiful bill. What is that going to do? It's going to add trillions of dollars to our federal deficit. It is a spending bill. Make no mistake about it. It is not a cost-cutting bill, which is unfortunate. Not a huge fan. There's a lot of good in it, but I was really hoping that we would see more cuts, a more watchdog to what the federal government is spending. It's just it seems to be a little out of control. So what is the appetite going to be? Because what that means is if it's light, and if it's light from the domestic side as well as it's light from the international side, it means that Treasury is going to have to increase its issuance, and that is not good for the overall value of our dollar in the overall economy. So that is really something that I think is the data that could really move the markets this week. And the last thing, the third thing that I think is going to be impactful, and it's going to be towards the later part of this week, although it's having an effect now. But as we move to the later part of the week, next week we have CPI. It is one of the biggest inflation numbers that the Fed looks at for policy. And what that means is perception is going to be reality towards the end of the week. So often, right, I try to steer away from that. I try to say be data driven, but with no data this week, all traders have to do is gamble on what's going to be next week. And I think as we get into after those auctions are there, what is it? I think Wednesday is the last day that we have the auction. We are going to turn and shift our focus to, okay, well, if inflation comes in high next week and the labor market is stable, you know what that means? That the Fed doesn't have to do a damn thing. And it's going to push out the projection for the Fed funds rate cut. As you can see right now, this looks like, what is it, a 69% chance, top right, 69.4% chance that the Fed cuts rates in September. That was reduced simply by non-farm payrolls from about 96%. It's gone all the way down to 70. And bet your bottom dollar that if inflation comes in high next week, and if the fear of that happens, we are going to start to see that sink sink as the week progresses. Overall, what do I see? I see a really rough week for interest rates. I see that this is a week that you really want to ride out those peaks. The valleys are not going to be there this week. I don't think there's anything significant that can really move it other than the 10-year Treasury. If they come in strong, despite all this rhetoric, I think it could slightly turn rates lower for a very quick moment. And if the banks reprice, you want to make sure you jump on that. But overall, I do not see a great week for interest rates. I think it's very heavily on all the stuff from last week and the perception of reality, which is coming at us heavy next week with inflationary data and the fact that the Fed might just be staying put longer than anyone anticipated. All right, y'all. Please don't hesitate to hit that subscription button. Every day, I also come to you with an episode of the Daily Dose, bringing to you a very quick 2 minutes of what happened in the marketplace, what affected interest rates, and what I think is going to be transpire for the next day. Also, if you'd like to be added to my newsletter, it gets pumped out every Monday. This is the week ahead. If you're a reader as opposed to somebody that likes to listen to me here and hear my voice and my banter, because sometimes I go a little bit off track. So thank you very much for tuning in. Please hit that subscription button. And if you need anything, a pre-approval, you need some quotes, you're listening and you're like, Kevin, I really don't know what to do. I'd love to have a discussion on where you think the marketplace may be going. I would love to jump on a Zoom call with you and have a personal discussion to help you understand better and make the best financial decisions for you. And if you're an agent out there looking for an opportunity, right? Truly transparent, very authentic, as you can see, on top of my game, researching this stuff. Would love an opportunity to earn your business. All right, y'all, have a blessed week, and I'll be coming to you later today with the Daily Dose.